following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 12th. Is today the 12th? I got to check this out. It is the 12th, and it's the 12th all day. That means it's the wonderful Wednesday edition of the Trader's Edge Show here at TFNN. Of course, I'm your host, Stevie Perseverance Rhodes. And one thing I know is that we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us. Not to us. That's right. When you and I, again, I'm sorry, I was doing two things at once. But here's the deal, folks. When you and I make that one little 2x4 shift, I won't let that happen again. It means that we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, well, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, and now is not too soon. Give us a call, 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading up 35 points. She's trading at 18,164. S&P is up about 5 points, trading at 2142. NASDAQ Composite is flat, trading out at 5247. Russell 2000 up a point and a half, trading at 1229. Gold is back $1.60. Silver is flat. Light sweet crude is off 68 cents, leading the charge here to the upside, up 32%. Altisource Asset Management, AAMC. That thing is moving to the upside. I don't see any news behind it, but it is moving to the upside. You've got NetEase up 3% or $8. Amazon up another $5. A little over 0.5%. Equinix is up 1%. Extraction Oil and Gas, XOG. That's up 20%. That's up $3.80. Mohawk Industries up $3. Stanley Black & Decker up $3. Alta Salon up $3. To the downside, you've got Humana. HUM is the ticker symbol, down $13, 7.5%. Regeneron Pharmaceuticals off $12. Bancorp 34 Inc., not to be confused with Bancorp 35 Inc. That's down 47% or $11. Allergan is off 2% or $5. The IBB down another about $5 to the downside. BIIB, that's Biogen, that's off $4 as well. So where do we begin? As I see a couple of questions here about natural gas, as good as any to start. So this is for TKC in the den, who is long UNG. We might as well first just go right to the UNG. That is the ETFs, not UNGH, because that will not get you what you're looking for. This happens to be the ETF for trading natural gas, and TKC is long this. And TKC, if we're going to take a look at this, here's what natural gas has, or UNG has most recently done. And that is that it made this nice little small A to B equals CD to the upside pattern. That was after breaking out of a little bit of a sideways trading range that was in place since the early part of June. We can see that there was a breakout of that just a couple of days ago on October the 7th. That says there could be more to come to the upside. When I'm referring to this little consolidation, right, this little box range out here, it's a consolidation pattern. And the beauty of a consolidation pattern is it does give us a measured move equivalent once price breaks above or below that. In this case here, it's a break above. So if we're just simply going to make our findings based on the UNG, this would say that UNG ought to travel up to about $10.12. That would be equal to the consolidation. That would be your 1 to 1.618 A to B equals CD pattern of just this small A to B equals CD that we're looking at. If you were going to say, hey, where is resistance? Well, really the only resistance out here inside the UNG is not from a bearish candle standpoint, just simply from a TAS market profile standpoint, is a brand new profile that formed today. $9.42 would be your number. If we go back over to the left, is there really any resistance out here? No, not really. Nothing to worry about. So those are now support on any kind of pullback if we're just utilizing the UNG, which is really not what we're going to do. But since that's the ETF you're in, you get below 906. That says you come back and you test the top of the consolidation, which is approximately 887. So no idea where you're at, where you're in, what your position is long term. I know you're holding the long position. I don't know if you're looking to hold a long position for a longer term period of time or not, but those are the numbers that we would take a look at. Now, with regard to natural gas, I don't know what is inside the UNG. Do you know which futures contract or contracts are inside of the UNG? Does anybody know that out there? I don't know that off of the top of my head. I would try to find it's going to take me to Yahoo, and that's a real Yahoo out there. And you know what I mean by that. Actually, you don't even have to know what I mean by that. So it looks to me like the top two holdings, AG says it's December, and the futures contract, so two holdings represent 50% of this, which are November. The November contract is 50%. So maybe December is the other 50%. I don't know. I would actually go to the ETF and check it out, because that would be more helpful in really being able to provide you with information. But nonetheless, we can go to the December contract out here and take a look at it. So that's what's going to pop up on our screen. Really nothing bad with when we take a look at this contract, right? You got higher lows, higher highs. There's your consolidation pattern. Here is on the December contract. Here are your brand new TAS profiles that formed today. So resistance here is going to be 347. And on the downside, support is certainly going to be that weekly profile of 3.31 out there. So nothing bearish, no bearish candle. It's up against resistance. If we just take a look at profiles, I could find some other resistance out here, but there's nothing really bearish about this. If we switch over, I don't know if I could do this. Can I do I have it up here? Do I have it? Yeah. Let's take a look at the January natural gas contract, just in case that is up a part of the UNG. I don't know if it is. But I can tell you that December is only 50% of what is inside there. Here you can see the numbers for the January contract, really the same patterns that we're looking at. So in essence, does that help you out, TKC, with regard to NAG, with regard to natural gas? If I look at it looks like it does. So I think we're all set there. So now let's go take a look at, hey, what is the market doing out here? We're having an expected and anticipated bounce, right? Yes, of course, we talked about this yesterday. This was one of the things we talked about. We discussed how inside the New York Stock Exchange, when its advanced decline oscillator gets to the minus 150 area, yesterday's close was minus 159.9. That certainly is the minus 150 area. That what we know. Really, I know this over the course of the indice, but certainly if we just take a look at 2016, basically this has formed bottoms. All with the exception, we covered this yesterday, I want to do this in detail, with January of this year. And the pattern that exists in January of this year is really the pattern that exists right now. And that says we've got a lot more downside in this market. But we'll take a look at both sides of the trade here. I don't want you to think that I only lean one way when I'm leaning one way. This is Steve Rhodes with TFNN. We'll be right back, folks. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So as I was saying before we went to break, we're taking a look at the New York Exchange. We're looking at the advanced decline oscillator reading out here, and that's the bottom panel of my chart. So you and I know unequivocally when you get down to minus 150, you should be anticipating the bounce. Now you want to take a look at other things that are setting up at the same time that help to confirm that. Did the market do that for us yesterday? As Tom likes to say, in spades. It most certainly did. So now what are we looking for here? Because I can't rule out that it's not a bottom. I just simply can't rule it out. I do believe that it's not, and there will be steps along the way in our triptych to tell us whether that is the case or not. I don't believe that it is, but we'll know for sure if what we see take place. You see, the New York Stock Exchange, a little red line. This is a red line you want to pay attention to on Stevie's chart. In this case here on this chart specifically, that happens to be the zero line of that oscillator reading. In essence, the simplest definition would be when the oscillator reading is below that, bears have control, sellers have control of the market. When it's above that red line, buyers are the ones in control. Sometimes that control doesn't do a whole heck of a lot. And for a period of 6 weeks here, we saw that the bears were not really able to do a whole lot. We saw a sideways move inside the market because that oscillator reading got below zero right around the July 25th, 26th time frame out there. Certainly July 25th, it was below zero. Stayed below zero all the way up until about September 6th. Pretty darn good number of trading sessions out there. So and if it could do it then when it was just floating around that area, it seems like it could do it now. So if we see a continued chop, especially down around this minus 150 level, what that bodes well for is the sellers in the market not the buyers in the market. And what it will tell us is that what we are seeing today, could be today and tomorrow, is nothing more than the expected working off of a little bit of an oversold condition. That's all. So that's what's going on in it. Of course, you and I also knew with regard to signals out here, when we put that together with the VIX index, it's one-day rate of change. I don't have that up on my screen. I'm not going to go searching for it out here or install it. We know that that was suggesting to you and I that we could anticipate a bounce. We got that really in the futures market, certainly overnight, began yesterday in the afternoon. We could see the VIX index above Stevie's blue line on this chart out here, 1507, staying above 1507. And this way, you'll want to take a look at where the VIX index, the cash indice, is trading at the end of today's trading session. They're going to release the Fed minutes out here. I don't know what the computers are going to do. It doesn't really matter to me what they're going to do. I will interpret the price action, at today's close. You stay above 1507. And that says that the bounce was just a one-hit wonder, or what we've seen thus far. Now, what else actually occurred yesterday to say, hey, expect that little bouncy type action? Well, the strong link out here, the strong dog, has been the NQ. And if we take it, it's been really spot on with regard to giving us signals. Your favorite signal, one of my favorite signals, which is singing in the key of G out there. I don't even know what that means. I just know that when we get to that seventh wave move, or otherwise on these charts here right now labeled as G, uppercase or lowercase, when the market makes those moves out here, I don't care how euphoric you are to either side of the market, it's telling you something. And what it's telling you is the market is getting ready to reverse course out here. Now, with this being the strong dog, it did that most certainly overnight. Made a high right around, 10:30 or so? What was the time frame out here? 21:30. So what is that? Really, 9:30? Yeah, 9:30 out here. Moved sideways for a good hour or so, and then started moving lower. So now we can see that price here ever since about 5 o'clock this morning has been contained within this little boundary area, at least on the top portion of it. It's our TAS market profile high, 48.2350 to be exact. So if we get above that, we being price gets above that, then what is likely to occur is we're going to see some type of Gartley sell pattern form. And that will look something like this. Voila. We're going to go from, by the way, it was price relative strength divergent pattern yesterday. It was that seventh wave move. It gave you everything that you wanted to say, okay, anticipate a bounce. Now, the reality is, it's not really much of a Gartley. Gartley didn't really care. He didn't articulate the Fibonacci numbers out here. He was just looking at the pattern of A to B equals CD. So since the retracement here early this morning basically got us back into yesterday's low at about 2:30 in the afternoon, really any continued bounce takes us to about that 48.44 level, which gets you right back to last night's high. And that may be all she wrote out here on any kind of move higher. Can it move higher than that? The answer is yes. It can do anything it wants to do. But this is what I would anticipate at this stage. Likewise, now, that is not much of a bounce, right? When you take a look at the last number of G patterns that we've had out here, we've seen the market just kind of really swoosh, take off to the upside or to the downside, and we have not seen that pattern play out here. So that's, to me, is another signal that the market wants to continue to move lower. And it may not give you any substantial bounce beyond where we're at right now. If I take a look at the 2-hour chart, I was going to start singing the song from Gilligan's Island, or somehow that tune just flashed into my mind out there. You can hum it along with me, and I don't know where the 2-hour chart, kind of thing came in, but it just did. Hey, if we take a look at the 2-hour chart, it is Stevie's red line right now that is containing price. Yes, where is Ginger? Where is Ginger? Ginger is great. I mean, well, I should be careful what I say about this, but actually, I each morning I start my day with a 2-ounce shot of wheatgrass and a 1-ounce shot of ginger. You can take that wherever you want to, but when we take a look at the 2-hour chart, we're looking at Stevie's red line. That is the oscillator unchanged line. And the 2-hour chart has now contained price. If you get above that, what this says, this will confirm that move up to the 48.40-ish area. In this case here, it says 48.36. What grass? Wheat grass out there. I have been doing that, folks, for, I don't know, 25, 30 years out there or what have you. And let me tell you, it's the most disgusting. And it is like going out in your backyard, taking grass, putting it in the old grinder, and it's actually a juicer, not a grinder, squeezing it out of there. But when you put like an ounce of ginger is a little spicy out there. So that totally wipes away most of the flavor. That's, of course, followed up by 1 little teaspoon of almond butter. Or sometimes macadamia nut butter out there, which is also really not too bad. And how could butter be bad? It doesn't matter what it is. In any event, yes, it makes you feel very good, very healthy. So that's what's really going on inside of the market. We could show you the same patterns inside the ES Mini, inside the Dow, but it really doesn't matter. It's the same patterns in essence that are out there. So, and I don't know if the market's really going to respond much today to the Fed. You don't know either out here. But at this stage of the game, everything is really pointing to what you and I took a look at yesterday, which is a continued flush to the downside. Now, if we looked at the presidential election charts, right? So the market's going to start heading down, all right? And you're going to hear, I don't know I know what you're going to hear on the boob tube. They're going to start telling you that the Republican Party has a chance. That's just to keep you tuned. The deal's done. We looked at the charts. We already know the results. And those results are, boy, you want to have that gunpowder ready to go come November, because it's going to be one heck of a Christmas present that you're going to give to yourself and others in your life. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 39. S&P is up 5. A couple emails that came in. Steve at TFNN.com, by the way. That's how you'd like to reach out to me. And must be that Marvin Gaye is listening from up above. You got to like that, because the email says, Steve-O, what's going on with the sectors inside the S&P 500? So I think, didn't Marvin Gaye, didn't he do the song, What's Going On? I could sing that too, although probably better off singing Gilligan's Island. I could get most of you guys to probably sing along with me on that. So let's go answer the question, if we can, with regard to, we haven't covered the sectors, and I can't remember when. So let's go answer, what's going on with the sectors inside the S&P 500? So let's start from the top and work our way down. If we start from the top, that says we take a look at the XLK. Now, interestingly enough, if the XLK if the market were to close here right now, you'd actually have a hammer candle inside of the XLK. Really just been moving sideways out here. If we take a look at the XLK, it's only made its third wave in a Chapman wave, which suggests that you could move higher. However, a couple trading sessions ago, Tom DeMark would say, hey, not so fast, because it made a TD sequential count. That can often be the sign of a top. We know that price is trading below Stevie's red line. 47.83 is the number. That's the oscillator on change line. So if this today's session means anything, you need to see a move about 47.83. What does that say to you and me? If we see a move about 47.83 inside the XLK, it's going to go make a new high. Now, I believe we have a lot of tech stocks that are out with earnings over the course of the next week or two. Our man Polar Bear would be able to confirm that for me, but reliable sources would suggest that that is the case here as earnings season has kicked off. So you get about 47.83. You're going to go ahead and at least make a higher high, meaning taking out the previous high from just a couple of days ago. So that is what's going on inside of the XLK. Let's take a look at sector number 2. That is the health sector out here. That is the XLV, which, interestingly enough, yesterday and today has been pushing lower with less relative energy out there. Now, that alone is not, I do repeat, that alone is not a buy confirmation. However, if the cavalry were to show up, in this case here, which likely wouldn't take place till tomorrow, but it could today, but if the cavalry were to show up and you say, what the Sam heck does that mean? We need to see a bullish reversal signal, which, by the way, if you really want to learn the 14, and you should want to learn it, if you are a trader and you are a pattern recognition specialist, and you don't know your P's and Q's, or you don't know your Japanese candlesticks, and come learn them. Let me teach them to you in the short order. We'll get rid of all of the guff that you don't need to get rid of and just focus on the 7 that you do need to learn. And once you learn those 7 bullish, their opposite are the 7 bearish out there. And it's easy to do that. Just come over to the homepage at TFNN.com. That's one of the workshops included in my newsletter service for this month, as well as the workshop that I'm going to do a week from today. Plus, you get several other goodies in your goodie bag out here. But the healthcare sector is pushing lower with less relative energy out there. So that would have to say, something to think about. Until the cavalry shows up, prices will continue moving lower. If we take a look at the financial sector out here, what do we know about it? It's actually pretty healthy. Healthy from what standpoint? It has not given us any kind of bearish message, such as even going ahead and saying, hey, I'm going to do an A to B equals CD to the downside, which if it does, the A to B equals CD pattern to the downside looks like this, which was going to look like that, which takes us down to really only about 1875. But that's not the case as we speak right now. Yesterday's push to the downside was not confirmed with regard to the S&P falling apart inside the XLF. Why do I say that? Well, for 2 reasons. One, the push lower was nothing more than a test of that oscillator and change line. That means the price oscillator is still rising. It's very likely above the zero line out here. I could find out, but that's neither here nor there at the moment. Closed above its TAS weekly profile, which was set up from the bearish standpoint. So that's old resistance. That is new support out here. The XLF is looking pretty good. You get below 1951, then the story changes. Then that A to B equals CD to the downside comes into play. Sector number 3 with regard to, or 4, I should say, with regard to what's going on, the XLY. What is it doing out here? Excellent question. Do I see any kind of pattern that is reliable to us? Actually looks more like an A to B equals CD to the downside than it does anything else. Today's test is stopped right on that oscillator unchanged line. So at 79.41, we're trading right on that. It does certainly have support at 78.32. You break below that, and then you're likely to see an A to B equals CD to the downside form out there. Let's go to take a look at sector number 5, the industrials, XLI out here. If we take a look at it, this has the makings of an A to B equals CD to the downside. That's really what was confirmed yesterday. Just needs to break out 56.94. Once it does that, then what we'll see out here is we'll see a price projection that takes you down to about 55.78. Could be lower than that out there. That's what's going on inside of the industrial sector. Sector number 6 out here, not to be confused with sector number 7. I don't even know what that meant, but we can take a look at the XLP, which, by the way, yesterday formed a bottom with a 7th wave move to the downside, which is very interesting because when it made its most recent high, it did it with a 7th wave move to the upside, letter G out there. Now, what yesterday also was a 1 to 1.618 A to B equals CD to the downside. And today, we actually have a bullish reversal signal. The bull sash candle out here, price is trading above my oscillator unchanged line at 52.29. Says price is likely going to go head up to the 52.68, maybe 53.25 level. But we actually have a reversal signal. XLP is the consumer staples area, which has really been thrashed and trashed out here. But as we speak right now today, the way things are trading, this thing actually has a buy signal. If you were a person that is all out bullish, then you should be taking a look at something that was just pushed to the downside, the XLP out there. Let's take a look at the energy sector, XLE. Let's go see what it is doing. And that is the 7th weighting inside of the S&P 500. And really today, all it's doing is testing its oscillator unchanged line out, or nothing really bearish about this sector as we take a look at it. Let's go ahead and finish off the last 3. The utility sector, XLU. This thing has been pushing lower, doing less relative energy out here. We still don't have the bullish reversal signal needed. However, we do have a TD setup 9 count that occurred a couple of days ago. It doesn't become a buy signal till you get above my red line. That's 47.66 out here. That is the utility sector, XLU. Let's take a look at the real estate sector out here. The real estate sector is giving us a confirmed A to B equals CD. Also had a 7th wave move 4 trading sessions ago. Also had a TD sequential count 4 trading sessions ago. Let's just say you get above the red line, 31.45, and then this could have some action. So the real estate sector, the utilities, giving us some signals maybe of a bottom. Last but not least, that is the XLB out here. It wants lower price. You may say, well, where is lower price, for goodness sakes? And I will tell you that lower price is, oh, come on, work with me before the commercial, 44. There we go. 44.94 to be exact. This is Steve Rhodes with TFNN. Dow's up 32, S&P's up 4. That's what's going on in the S&P 500. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at a couple of other requests that have come in here. So let's go take a look at those. One was to take a look at Kansas City Southern. KSU is the ticker symbol. Now, let's take a look at the weekly chart and see what the weekly chart shows us out here. And this is what it shows me. We had a nice day, nice volume day yesterday inside of it. But when we put the weekly chart up on our screen out here, what is very clear is a level of resistance that has been around since July of 2015. So for over a year, this is a very strong resistance area. I'll put a horizontal line across. You'll see that it's really right about, let's just move this down, right and around this area here. It's a blue horizontal line on my screen. Now, why do I say that? I say that because, you see, bulls and bears can't hide. Their one responsibility when they punch into work each and every day is to leave you and I a signal. And up at this area here of about $100 or so, August 7, 2015, little dark cloud cover. 2 weeks later, little bear sash candle. As price gets up into this $100 area back in October 2015, big old bear sash candle out here. Now we fast forward to 2016, August 12th, little dark cloud cover. Then you take a look at September the 2nd, little bearish engulfing candle. We can see price right now continuing to trade below the oscillator unchanged line, 94.30 out here. Even if it gets above that, it says this $100 area is going to be tough sledding. Now the positive there is if Kansas City Southern can get above that area, then you've got a change in polarity. You've got a change in trend. But until that time occurs, until that actually occurs out there, you've got tough sledding up at that $100 area. So where is support? On this? Well, really, if I take a look at support for this equity, right now the support that shows up the easiest for me, because it's broken a trend line, has it not? Right? If we just take a look at a quick trend line here, there was your trend line. That's the blue diagonal line. So that's been broken to the downside. So not necessarily great. And support should be And if it's not, then I'll tell you where it goes to next. But 93.36, and below that, your next stab at this equity is going to be $89.36, right around that area. So that is on Kansas City Southern, KSU. Remember, always good to take a look at what's going on above one level above where we're trading, because oftentimes that may give us a lot of clues. When we look at that weekly chart for KSU, it could not be more clear for me what is happening as price gets up into this area out here. So I hope that helps you out. Another question that came in is if we would take a look at, if I would revisit the daily S&P 500 chart, the SPY chart with the oscillator on change line, and see what it says to us. So let's go do that. Let's do this. This was yesterday's chart, and then we'll put the SPY up. Here is the chart, which I think is the most important chart out here, and that is the S&P 500 up at the top portion of my screen, the VIX index at the bottom portion of my screen, and the price oscillator in between. That is important. You can now see that is a minus 1.57 out here. When that price oscillator is falling, which it turned down yesterday, as soon as price gets below that red line, but when it's falling and it gets below zero, that's when Will Robinson would signal to you danger. Danger. Doesn't have to play out this way, but I will tell you, it's like walking into potential quicksand. When was the last time we experienced that inside the S&P 500? Well, it happened to be the decline back in January of this year out here. Are we going to have a similar type decline? I don't know. I think so. That's the current message. Why would I think any different when that is the current message? What would negate that message? Really, two things. One, I need to see that VIX index get back underneath that top black line out here, 1507. But more importantly, 1386 would be the number that I'd be looking for. And I need to see the S&P 500 get above 2153.61. If both of those things happen, then the move lower was nothing more than a dream out there. But otherwise, at this stage of the game, we have to prepare ourselves for something like a scary bottom, which typically occurs in October, but this year it's been delayed until November, but it's beginning in October. So we could have a nice month of some real sledgehammers, who knows what. It's bound to get ugly. Why wouldn't it get ugly? I mean, really, why wouldn't it get ugly out here? That's the message right now, and we've got a tool that says really the same thing. And the time before that, where we ran into the same kind of scenario, was back here in August of 2015. So we have really the exact same patterns unfolding out here. How many days it takes, I don't know. And look, could it be before November? Yeah, it could be. Absolutely. I mean, when we see a bottom, we're going to know that there's a bottom out here. But at this stage of the game, I got to go for a month of nastiness. Now, with regard to the SPY, what's the number we'd be looking at inside of the SPY? Let me put that up on this little chart right here, and that number would be 215. So what would negate that forecast inside of the SPY would be 215 right now, even Steven, you're 213.87. What is today's action in the market? Totally 100% anticipated by you. You're the one who caught this. You said, Steve, the advanced decline oscillator reading inside the New York Stock Exchange is minus 150 or lower. You know that means the market should bounce or bottom. And then you said, hey, VIX index rose by, I don't know, 13, 14, 18, 19%, whatever it was yesterday. And you said, aren't we supposed to get a one-day bounce? And so you're the one that sent me the message out there. You knew what to expect. That's all that today's action is. The question is, for those that are not short, where do you jump on board that short train out there? And I don't have, if I'd give you the number if I could. I really got to see how the market trades after this, probably about 3 o'clock or so. See what the market is doing. But it seems to me like I'm not going to say. I'd rather you've been short yesterday than be asking that question here today. Okay, so I hope that answers your question inside the 10 out there, Mr. John. I don't think that there were any other den questions, so let's go back to the emails out here. 0959. There we go. It says, Steve, would you, hey, nice singing out there. No, it doesn't say nice singing. It says, I am in the JNUG and wondering your thoughts on GDXJ. So it sounds like the junior minors out here. So let's go take a look at those. We've had a few calls on these. So what was it? GDXJ. So let's go take a look at this equity, see what it is doing out here. GDXJ. I'm going to go over on my other chart, try to give you the info on it. So as we take a look at this, this is oops, I didn't mean to do that. A listener that is long this. And here's what I would say. You just don't have a bullish reversal signal just yet. Doesn't mean you're wrong on your trade. It just means you don't have what you'd really like to see, which is a message that the move to the downside is over. And I'm telling you, I wish you did have that message. And I'm kind of selfish about that. We can see the 1-to-1 A to B equals CD to the downside. You're trading below a TAS market profile daily. None of that is good news. We need a bullish reversal candle, and it's just not there yet. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, just sit right back and you'll hear a tale of a fateful trip sounds like the S&P 500 at this stage with regard to the way that it behaved yesterday and is likely to behave for the rest of this month and then a little bit and then for the next week or two after that as well. So we'll continue to pay attention to that. Now, with regard to GDXJ, for our listener that had written in, a little bit of a different pattern here in the actual GDX, right? So the GDXJ didn't give us a bullish reversal signal, but GDX, a different story as of 1:54 p.m. You have a nice little bull sash candle that is forming really near the A to B equals CD pattern. Not right down to it, but we use these really as guidelines out here. So what do you see? What do you need to see next to say that, hey, maybe there is some real life in even the junior miners out here? Well, I'd say you'd like to see the GDX get above its daily profile low, 2305. We're trading at 2297. Then the next move you're looking at is not the 2445. You're looking at 2365. It's not on this chart here, but that would be the oscillator unchanged line. You get above that, then 2445, and above that, then you're off to the races out here. So the GDX as of 155, I don't know what it's going to look like at the end of the day, but right now it's giving you a glimmer of hope on that trade, with the cavalry having trying to establish a bullish sign in it. Question with regard to, do I place numbers for waves manually? And the answer is no, I do not do them manually. I used to do them manually and made so many mistakes. I said, why am I doing that manually when I can just simply go ahead and develop a tool and do it electronically? And that is what I do. And what is being referred to, I suppose, if we just go back here, let's take a look at the NQ chart as an example. Of course, God, I have so many different tools on here, but let me do this. Now I'm showing these as, and it said numbers. I think you're talking about the wave counts. Right now I've switched these to lettering because I've got other Tom DeMark numbers on here. That's a whole nother scenario. But if we just simply, I've just got a tool here. I'm able to point to the lowest swing point, which was right down here at about 12 noon. This was back on October the 7th. I just hit a button and it automatically goes out there and it creates that wave count for me. And it on an ongoing basis, it is always numbering these wave counts, and that way I know where we're at inside of the market. I even have this thing tuned so that at certain wave counts it sends me a text message to my phone to alert me. Sometimes makes for an uneasy night of sleep, but at least I know once we get to a certain wave count that I should open my eyes, because it may be a gift. Because the way I look at it is things happen for us, not to us. And we're always looking for gifts out there. And that seventh wave move to the upside or the downside, I don't know if we could package a better gift for us. Does it work all the time? No. But does it work often enough? Yeah, and it's beautiful with regard to your stop management out there and everything. So it is a cool tool. So what else do we have? Take a look at. We didn't really look at any individual equities out here, but we looked at the sectors. We got a feel for what's going on out there. You know, big moves here. I don't know what's Humana doing. HUM is a ticker symbol. This thing has had a pretty decent move today to the downside, 4.8 million shares. Coming right back into where this thing had broken out, probably going to head all the way down to the bottom of that level, which is the date of July 21st, which is about the 153 area, or 167 right now. So looks like that is the move behind Humana. Is there any great anything else out here in Humana that is really dangerous looking? Nah, probably not out here, but it looks like that's where it is headed to. So that ends our 1 hour tour of the markets here at Stevie's Island. Thanks so much for joining us. Stay tuned, because it is Wonderful Wednesday, and that means your favorite polar bear and mine. He's up next, Mr. David White. Hope he's feeling well. I think he was a little under the weather with a headbanger out there. And then, of course, you got the Tom O'Brien Show from 3 to 5. So, folks, have a wonderful Wednesday. We'll see you on a terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.